Adobe stock, ticker symbol ADBE, is reporting earnings on March 12th. Now, if you guys follow the channel, you know that I am an Adobe shareholder. I've been buying the stock and dollar cost average my way down. Now, I would say I'm currently down on my position about 2% after the recent run-up of almost 6% in the past week, while the S&P 500 was down about 1%. However, despite that recent run-up in this past week, the stock is still down about 40% in the past 5 years and down 38% in the past year, so it has been absolutely crushed. So let's see in this video if this stock is still a buy. Now that the market cap is $111 billion, they are generating $23 billion in revenue, up 10% compared to the year prior, and net income has grown 28% to $7.1 billion. They are now trading at a forward PE of 11, which looks extremely cheap, although we'll talk later about the valuation with the discounted cash flow model, and analysts have them rated as a buy with 47% upside. And their last quarter was a very good quarter. Adobe achieved a record revenue of $6.1 billion in its fourth quarter, which represents 10% year-over-year growth, and they also reported record operating cash flow of over $10 billion in the full year 2025. But this has not been a one-quarter thing. If we take a look at Adobe's last 10-year revenue chart, it has grown from $4.7 billion to $23 billion currently. They have grown at double-digit percentages every single year. And later in the discounted cash flow model, I will show that we don't need Adobe to grow at double-digit in order to make amazing returns on our money. Now, if we take a look at profit, again, it is also at an all-time high and has grown from $1.2 billion to $9.8 billion in terms of free cash flow. And if we take a look at the financial forecast, analysts are expecting fundamentals to keep getting better and better. They are expected to make $26 billion in revenue in 2026, up 11%, and then grow to $35 billion by 2030. So high single-digit growth for the next 5 years. In terms of profit, from $23.97 per share to $33.60 per share. So again, both growth in revenue and profit. And as far as the upcoming earnings, which as I've said before, are due on March 12th, they are expected to make $5.87 per share for the quarter and $6.2 billion in revenue, which would be record-breaking revenue. They've also beaten for the past 4 quarters, so let's see if they can beat again. Now, I will say that if they miss or beat on earnings, it doesn't change the thesis about a company long term. It's just 1 quarter. And as we've seen before, Adobe is a cash machine. The reason for this is because their margins are insane. Their gross margin is nearly at 90%, currently at 89%. And their free cash flow margin is currently at 41%, which also means that their balance sheet is amazing, as they have $6 billion in cash and $6 billion in debt, so they can pay off all this debt whenever they want, and Adobe is in a very safe and great financial position. Now, with all of this extra cash, they've decided to do one thing, which is huge for investors, which is buy back shares. As you can see, as the stock has gotten cheaper and cheaper, Adobe has bought back a ton of shares. I mean, last year they bought back 5% of their shares. This is huge for investors as you own more of the company and have to share the profits with less people. But now let's get into the valuation, because this is the main reason why I'm invested in Adobe. By the way, if you want access where I'm showing all the data in this video, you have my link to stockanalysis.com in the description. Now, as far as the valuation, the price to free cash flow is the lowest in Adobe's history. As you can see, Adobe used to trade between 20 and 30 in terms of price to free cash flow, and it is currently at 11. But as you guys know, historical valuation does not automatically mean the stock is cheap. So in order to take a deeper look at the valuation, I use my Google Sheet, which is a discounted cash flow model, and tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And as you can see, the intrinsic value according to my low assumptions is $207 per share, middle $425, and high $573. And the stock is currently trading at $273 per share, which means that if my low assumptions occur, you would get a 12.2% annual return on your money, middle 18.5%, and high 24.5%, which are insane returns, especially considering how conservative my assumptions were. I mean, I have Adobe growing revenue between 4.5% and 7.5% annually over the next 7 years, averaging a profit margin and free cash flow margin between 30 and 40%. Keep in mind they are currently doing 40 and growing revenue at around 10%. And I assigned the PM price to free cash flow at the end of the 7 years of 15, 17, 19. And I also assume they buy back 2% of their shares annually. But if you want to make your own assumptions, I'm going to leave a link to a spreadsheet down below. Super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. And in this video, I haven't touched on the topic, will AI destroy Adobe's business, which is the main fear around this stock. I have tons of other videos in case you want to check it out. I'll just summarize it real quick. I don't think AI will replace Adobe because I don't think there is a need to recreate the whole software behind Adobe. What I think is going to happen is that AI is going to be integrated within Adobe, which they are already doing, as they have tons of AI features inside the app. Now, like every investment, there is risk. However, I believe the risk reward in this scenario is very positive. And if I had 50 companies in the same position as Adobe in my portfolio, I know I would beat the market. I hope you found this video valuable. Let me know what you think about the Adobe stock in the comments, and I'll see you in the next one.